All right, in our last video, we learned to prepare T accounts. We've done that, and now we're going to prepare a trial balance for this company. So let's get to it. The trial balance is kind of like a financial statement. It lists all of our accounts. So it just lists in order, in like balance sheet order, assets, then liabilities, then shareholders' equity accounts, then revenues, and last expenses. And dividends could either go in with the equity or at the bottom of expenses. So in our case, we put it in with the equity. So that's it. We're just going to list all of our accounts, and the name of the statement we're making is called the trial balance. So what does that mean? Well, we're trying this out to see if it's going to balance. We're going to see if debits equal credits, because if they don't equal credits, we screwed something up. So let's go ahead and do that for our company. Our company's name, now this has a 3-line title. Our company's name is The Right Stuff Inc. And actually, let me make sure I've got that right. Yeah, the right stuff. Oh, I put a comma in there. Didn't need a comma. The Right Stuff Inc. We're doing a trial balance. And this is for the month of August. The month ended August 31st. And there we have it. The month ended August 31st. So we're going to list our assets, and we're going to list them in the order of liquidity, the order they'd appear on the balance sheet. So if I were listing these in order, cash, then AR, then supplies, then equipment. Now the beauty of this is there's no subtotals. There's no like, oh, my current assets, total current assets, long-term assets, total long. No, no, no. We're just going to list them. So let's start with cash. And the only headings here are DR and CR, and you guessed it, for debits and credits. So our cash ended with 950, our supplies with 200, our accounts receivable 0. So actually we don't even need to include it, but we have, and it's fine to include it as well. Equipment 4,000. There's our assets. Moving on to liabilities, we got the two. We got the bank loan and we got accounts payable. Oh, wait, we got to do this in order. So just thinking of order of liquidity, accounts payable should be, of course, first because it is more liquid, more frequently paid off, right? Now, this is a credit balance of 400, so I'll write it on the credit side, 400. The bank loan payable is 5,000, and again, that goes on the credit side. Next, on to equity, we'll do common shares, then dividends. Common shares 1,000. Because this was a new company, there is no retained earnings. That's unusual. We would expect there to be retained earnings. We can even put retained earnings 0. There's going to be retained earnings when we finalize these amounts, but it's just a new company. And dividends 500. Next, we got our revenues and expenses. So we've got taxidermy revenue. And I'm just literally writing the amounts from over here, and I'm just writing it over to here, 1250, just transferring those amounts. And now my expenses, rent, utilities, telephone, and salaries, rent exp, utilities exp, utilities expense, telephone expense, and salaries expense. Rent 600, utilities 200, telephone 200, salaries 1,000. So at this point, I'm going to actually erase this. Not that it's that important, but this is my trial balance. This is what a trial balance should look like. The only thing left is totals. We want to make sure our debits equal our credits. If they don't, then we've made a mistake. So 950 plus 200 plus 4,000. I'm doing the left side first. Plus 500 plus 600 plus 200 plus 200 plus 1,000. Adding it up, I get 76.50 on the debit side. The credit side, 400 plus 5,000 plus 1,000 plus 0 plus 12.50. I get 76.50 on the credit side. At that point, I'm feeling good. My trial balance balanced. Dollar signs at the top of each column and beside the bottom line of this statement, and we've got ourselves a beautiful trial balance. Now, what's the use of a trial balance? When I was an auditor, I actually worked off of trial balances mostly. They let you see all of the accounts of the company in one shot, right? You can just look and see all of the accounts of the company. That's useful. If I had to generate financial statements, I could, because if I just look right here, I've got myself just in what's highlighted, the revenues and expenses. Well, guess what? Revenues minus expenses, well, I don't have to write it. Revenues minus expenses makes an income statement, right? That's an income statement sitting right here. At the top half, I have my assets, my liabilities, and my shareholders' equity accounts. That is my balance sheet data. So I have all of the financial statement data kind of just laid bare there in one shot, one snapshot of the company. So anyway, a very useful statement to be able to prepare. We have done it. We have completed problem 22A. That's all for this video. Stay tuned for the next one. Bye for now.